Inflation eased to 23.7% in April this year. That's down from 24.2% recorded in the month of March. Meanwhile, activities in the Treasury bills market have been relatively calm this week as investors shift their attention to short-dated maturities. Emmanuel Orji, Treasury Team Member at Axis Bank, joins me for a market update. Emmanuel, thank you for joining us today.
Having me.
Let's start with market reaction to the latest inflation numbers. This for April, easing to 23.7% from 24.2% in the month of March. Market reaction and also your own takeaways from the numbers that you've seen from the MBS.
Okay, so for the fixed income market, we saw very little reaction as bulk of market participants are switching their attention towards the NPC meeting. So I think what will most likely drive a significant impact on the fixed income market is what happens at the NPC meeting next week. For the inflation print, I think it's too early to start singing praises. We saw inflation decline by roughly 50 basis points, and this decline was seen across board, both in food inflation and core inflation. And the major driver for this was the stability in FX and also a 3.5% decline in the price of PMS. Well, but nevertheless, there's still a lot of hurdles to go, particularly this quarter. There's still a lot of conversation happening between the US and China and a lot of great trade policies that still yet to be formed. But I think I'll most likely see inflation sticky at these levels going forward. Particularly in Q1.
Right. Any thoughts on the kind of comments we could expect to hear from the MPC regarding these numbers? Looking at food inflation, that also fell to 21.26%. And we know that obviously this has been one of the tougher points, elements on the broader inflation index. But what kind of comments can we expect from the MPC?
I think for the MPC, we'll expect them to maintain all parameters, particularly given that we have not seen a significant decline in inflation, at least for a 3 consecutive period. The major decline we saw, the reason why we're here is due to the rebasing. So the MPC will most likely wait to see a significant impact on inflation, given the policies that they have provided over the past couple of months. So definitely expect them to maintain, obviously, given the uncertainties around global trade and also what's going to happen in terms of the trade policies moving forward. So we expect them to maintain rates at this next week MPR meeting.
All right, let's talk about market trading action so far today. Bring us up to speed. Let's start with market liquidity levels and then take us through the Treasury bills market and the bond markets where investors are seeing value.
Okay, for system liquidity has hovered around 200-300 billion for the most part of this week. The major inflow that we saw this week was the bond coupon payments that came in yesterday. But however, this was offset by the CIR debit that also happened yesterday as well. Currently, the bank rates are still hovering around 27-28% for the most part of this week. In terms of the Treasury bill space, activities have been skewed towards the OMO maturities. We're beginning to see some renewed offshore participation, albeit less aggressive on those NTB papers, particularly on the long-term NTB papers. As beginning to see some yield pickup there by offshore investors. For the bond market is a bit sticky at this moment. The bulk of the activities are currently happening on the mid-tenor maturities, the 2033 on the run bond, and also the 2031. But we have yet to see significant volumes being consummated in that space.
And for the FX market, you did note that there's also improved liquidity. Help us understand, how regular has the intervention of the CBN been, say, in the last 2 weeks, and to what extent has that helped to stabilize the Naira?
Yeah, so for the FX markets, we have been seeing the Apex Bank intervene in that market, trying to maintain supply there. However, in the past 2 weeks, they have not been as aggressive as they were post the tariff announcement, as we're going to see some sort of stability and improved liquidity from both banks and offshore participants in that market. So the CBN are not intervening as aggressive as they used to. we expect sentiment to this intervention to remain at this level, with the CBN trying to maintain rate at 16 handle.
At 16, that was going to be my next question. I was going to ask if we could, there was a chance of the band going back to the 15 plus levels we had a few months ago, or if this 16 levels is a new band for the market.
I think for now we'll still expect rates to hover around the 1600 handle. What will most likely change that sentiment is if we start to see some aggressive renewed entry by offshore participants into that market. The reason why we got to as low as 1550 earlier this year was due to the fact that we had some signal foreign portfolio investors coming into the country. And post the U.S. tariff announcement, we have not seen that aggressive inflow coming into the country. But however, it seems that things are looking upwards with positive talks going on between U.S. and China, and also the Russia and Ukraine crisis there as well. So we expect that in most likely this quarter or towards the end of this quarter, we should start seeing us trying to touch that level that we were prior to the tariff announcement.
All right, Emmanuel, thank you so much for bringing us up to speed. We appreciate your time on the show today. Emmanuel Orji, Treasury Team Member at Access Bank.